In this video I am going to be revealing a very easy trading strategy that can lead you to extraordinary results. I know, this may sound too good to be true, but I want you to stick with me for this video. Before we start, be sure to subscribe to our channel, so that you don't miss on any of our new videos. With that being said, let's get into today's video. First, let us discuss the indicators that we will use in our strategy. The first indicator that we will be using is called as the half-trend indicator. The indicator is available on Tradingview as well as other platforms. If you want to use the indicator on Tradingview, then follow these steps. First, open up a chart on Tradingview. Then click on the Indicators button. A small window like this will appear. Then, type in half-trend in the search bar. Now, click on the first indicator. Make sure that the name of the creator is Everget. Now, you have successfully plotted the indicator. This is how the indicator will look. If you are using any other trading platform, then, just Google the indicator and download it for your particular trading platform. But in my opinion, using Tradingview is much easier. Now, an important point to remember here is that I am not the creator of this indicator. A lot of so-called traders, especially on YouTube, try to sell this indicator as their own. But I want to make sure that I am not one of them. I don't know who created this indicator. But it certainly isn't me. Let's get back to this indicator. On the indicator we can see that there are three lines. The central line is the actual half-trend indicator. The upper and the lower lines are nothing but two ATR bands that are placed above and below the indicator. When the price closes above the upper band for 2 to 3 candles, the central line will turn blue and a small blue arrow will appear below the half-trend. This indicates that the price is in a short-term uptrend. Similarly, when the price closes below the band for 2 to 3 candles, the central line will become red and a small red arrow will appear above the indicator. This indicates that the price is in a short-term downtrend. For the purpose of our strategy, we only need the central line. So we can remove the upper and lower band by unchecking the Show Channels option. Another change is that we will change the amplitude value to 4. Now the indicator is completely ready for our strategy. So, when the half-trend is blue, we will only look for buying opportunities. On the other hand, when the half-trend is red, we will only look for selling opportunities. Now let us talk about the second indicator that we will use in this strategy. That is the RSI indicator. The RSI stands for Relative Strength Indicator. As the name suggests, the RSI indicator shows the relative change in price over a particular period of time. The default settings for the RSI are set to 14 period. Therefore, the RSI shows the relative change in the price over the last 14 candles. The RSI is an oscillator. Hence, the value of the indicator is always between 0 and 100. Generally, when the RSI is above 70, it is considered to be in an overbought condition. This means that the price has become expensive, and we can expect a down move. On the other hand, when the RSI is below 30, it is considered to be in an oversold condition. In other words, the price has become cheap, and we can expect an up move. For our strategy, we will modify the settings of the RSI to suit us. Hence, we will change the RSI period from 14 to 2. We will also change the overbought level to 90 and change the oversold level to 10. This will give us a fast-moving RSI. Now, we will combine the RSI and the half-trend indicator to catch small pullbacks in a trend. For this strategy, I recommend using a 15-minute or a 30-minute time frame. For the sake of this video, we will use the 15-minute time frame. So, what are the rules of the strategy? The rules for a buying setup are as follows. Rule number 1. The half-trend indicator should be blue. Rule number 2. Wait for the RSI to drop below 10. Rule number 3. Enter at the break of the high of trigger candle. Let us understand it with an example. Here is a buying setup. Here we see that the half-trend indicator is blue. Hence, we will look at buying opportunities only. Therefore, we wait for the RSI to drop below 10. Here the RSI drops below 10. So, this candle becomes our trigger candle. To enter the buy trade, we will place a buy order above the high of the trigger candle. For us to execute this trade, we want the subsequent candle to trigger our entry. This means that, if the next candle does not trigger our entry, we will scrap the setup and look for opportunities elsewhere. In this case, the very next candle does trigger our buy trade. So, we will keep our stop loss below the low of the trigger candle. For profits, we will not keep any fixed targets. Instead, we will do something different. We will take our profits when the RSI goes above 90. In this trade, we exit at the close of this candle, as the RSI closes above 90. So, we made profits here. Now let us look at the rules for selling. Rule number 1. The half-trend indicator should be red. Rule number 2. Wait for the RSI to crosses above 90. Rule number 3. Enter at the break of the low of trigger candle. Here is an example. We can clearly see that the half-trend is red. Therefore, we are looking for selling opportunities only. So, we wait for the RSI to go above 90. Here we see that on this candle, the value of the RSI is above 90. So it satisfies both the rules. The half-trend is red, and the RSI is above 90. Hence, this becomes our trigger candle. So we place a sell order below the low of this candle. As you can see, the subsequent candle does not trigger our sell order. So we can scrap the trade. But this candle is also a trigger candle. If you look closely, the RSI is still above 90 on this candle, and the half-trend is still red. So we delete the previous order, and we place a new sell order below the low of this candle. As you can see, the next candle does trigger our entry. So, we keep our stop loss above the high of our trigger candle. For targets, we will exit when the RSI drops below 10. So, we exit on the close of this candle as the RSI goes below 10. That brings us to the end of this video. If you like this video, then be sure to subscribe to our channel so that you don't miss on any of our new videos. See you soon.